So in this episode, we'll continue the same question. Journal entries were cash account debit to capital account 5,000, purchase account debit to cash account 1,000, cash account debit to sales account 2,000. 3 journal entries were there and 4 accounts were opened: cash account, capital account, purchase account and sales account. In the cash account on credit side, the closing balance was, I mean to say by balance CD was rupees 6,000. This was the closing balance of cash account. Closing balance is the amount that's supplied to the weaker side. And in the same way, in the capital account on debit side, to balance CD was rupees 5,000. This was the closing balance on 31st March 2013. And in purchases account on credit side, by balance CD was rupees 1,000. Means this was the closing balance. And in the fourth account, I mean to say sales account, on debit side it was to balance CD 2,000. So these were the closing balances of the 4 ledgers or 4 accounts. And on the basis of these ledgers, I mean to say on the basis of closing balances of the accounts or ledgers, trial balance is prepared. Maybe it's a new thing for you, trial balance. So trial balance is prepared, a T is formed, and draw one more horizontal line and write down on left hand side, write down debit balances, and on right hand side write down credit balances. Basically, trial balance is the list of closing balances of different ledgers made during the year. During this year, we have made 4 ledgers: cash account, capital account, purchase account and sales account. And each and every account has its own closing balance. Sometimes some accounts don't have any balance. I mean to say, when the total of both sides are equal, there is no need of closing balance. But in this question, all 4 accounts or 4 ledgers have closing balances. So in the cash account on credit side, the closing balance was 6,000 on credit side. If the closing balance is on credit side, what it means? The debit side was stronger and the credit side was weaker. That's why we had to supply the amount to credit side. Technically speaking, cash account is carrying debit balance because it has the stronger debit side. So the closing balance of 6,000 will be taken to the trial balance on debit side. Write down cash rupees 6,000. So in this way you will see that from the credit side amount has been taken to the debit side of trial balance, just like the working of the scissors. You know, there are 2 blades of scissors and one moves from left to right, another right to left. Now come to the capital account. Capital account on the debit side to balance CD is rupees 5,000. It means this is the balancing figure, or you can say the amount supplied by us to make it equal. So the amount was supplied to the debit side. What it means? The credit side of capital account was stronger as compared to debit side. So we can say the capital account is carrying credit balance. Credit balance means the credit side of capital is stronger. So this 5,000 from the debit side will be taken to the credit side of trial balance and write down capital account rupees 5,000. Again the scissors style. Now come to the purchases account. In purchases account, the closing balance, I mean to say balance CD is on credit side rupees 1,000. What it means? The debit side of purchases account was stronger than credit side. That's why we had to supply rupees 1,000 on the credit side to make it balanced, or to balance purchases account, or to make it equal. So this 1,000 will be taken to the debit side of trial balance. Now come to the sales account. You know, on debit side there is to balance CD. What it means? It means the debit side of sales count was weaker as compared to credit side. It means sales account is carrying credit balance. Credit balance means the credit side is stronger than debit side. So this to balance CD will be taken to the credit side of trial balance. Sales count rupees 2000. In this way, in the trial balance, on debit side, cash 6000, purchases 1000. You can write down account as suffix or not, it's up to you. Or you should follow your teacher, whatever he likes. So on debit side, the total will be 7000. There are only two items on the debit side, cash count 6000, purchase count 1000. Now come on the credit side. That is capital count rupees 5000 and sales count rupees 2000. The total is 7000. And please write down at the top of the trial balance as on. Always write down the word as on or as at 31st March 2013. You know, trial balance is always prepared at the end of the year, and ledgers are closed always at the end of the year. To close the accounts or to close the ledgers means to supply the balancing figures or closing balances. So in this way, we have made trial balance. So you know, first of all, transactions were converted into journal entries and journal entries were converted into ledger posting, and on the basis of ledger posting, trial balance was prepared. If the total of trial balance on both sides is equal, it means there was no error during the year. Basically, it's a test of your accounting activities. If there is any difference in the trial balance, it means if the both sides are not equal or both sides are not going to balance, it means some error has been made during the year. You will have to check all the journal entries, all the ledger posting, totals, etc. But in this situation, we don't need to check anything. Everything is perfectly all right.